Hi, my name is Putri Nashafina binti Muhammad Syafi'i. My student ID is 2025481899.
Hi, my name is Mazitino Azlina binti Omar Anis. My matrix number 2025483206.
Hi, my name is Nurul Ain Farhana binti Nazri and my matrix number is 2025422366.
Hi, my name is Nurul Shahada binti Kandarani and my matrix number is 2025226924.
Hi, my name is Rataf Marita Jalaluddin and my student ID is 2025239684.
Assalamualaikum and greetings everyone. Today, I will be presenting on cybersecurity issue in Islamic online banking. As we know, online banking has become increasingly important in Malaysia. Many Islamic banking institutions now offer digital banking service that allow customers to perform financial transactions conventionally through mobile application and online platform. Some common services include fund transfer, bill payment, and saving management. Example of Islamic banking institutions that provide these services are Maybank Islamic and Bank Islam. While these digital services offer convenience and efficiency, they also expose customers and banks to various cybersecurity risks, making cybersecurity an important concern in Islamic banking. Next, what is cybersecurity? Before discussing the issue further, it is important to understand the meaning of cybersecurity. Cybersecurity refers to the protection of computer system, networks, and data from cyber threats such as hacking and data breaches. It is aimed to ensure the confidentiality, integrity, and availability of information. Cybersecurity is closely connected to data protection, network security, system security, cyber threat prevention, and secure digital trust. In the context of Islamic banking, cybersecurity plays a crucial role in protecting customer information and financial assets. By safeguarding customer data, banks are able to preserve trust or amanah and protect wealth, which is known as Hifz al-Mal under Makasah al-Shariah. Therefore, cybersecurity support the overall objective of Islamic banking. Next, key Islamic finance concept. One of the most important concepts related to this issue is amanah or trust. In the Islamic financial system, banks have a fiduciary responsibility to protect customer funds and personal information. Customers place their trust in banks not only to manage their money but also to ensure the security of their digital data. This concept can be seen in several Sharia contracts. First, in Mudarabah, customer provide capital while the bank manage the fund responsible and honestly. Second, in Wadiah, the bank acts as a trustee and is responsible for safeguarding customer asset and information. Third, in Wakalah, the bank acts as an agent on behalf of customer, requiring transparency, accountability, and secure the transaction management. Therefore, maintaining strong cybersecurity measures is essential for Islamic banks to fulfill their role as trustees and uphold their principle of amanah.
Hi everyone, I will explain the concept of Hifz al-Mal, which means protecting wealth in Islam. Hifz al-Mal teach that people can own wealth but it must be earned in halal and lawful way. Islam also teach Muslims to avoid theft, fraud, corruption and riba. Besides that, wealth should be managed and spent wisely for beneficial purpose. This concept is important because it helps provide financial security and encourage ethical financial practice and prevent harmful activity that can be affect society. In modern banking, Hifz al-Mal is related to the cyber security because strong security system help protect customer data and prevent online fraud. In conclusion, Hifz al-Mal promotes responsible wealth management and help create a safe and trustworthy financial environment. The case study is about Bank Negara Malaysia imposed a RM1 million penalty on Bank Kerjasama Rakyat Malaysia Berhad in 2026 due to cybersecurity and customer information protection failures. BNN found that the bank failed to implement strong cybersecurity control under RMIT policy and did not properly protect customer information under the MCIPD policy. The issue was discovered after an external threat actor gained unauthorized access to the bank IT infrastructure. BNN stated that the incident happened because of weak cybersecurity control and poor incident response capability. As a result, BNM imposed the penalty because the bank failed to meet the required cybersecurity and regulatory standard. Next, the case study is about Agrobank fraud case involving kudos of 203.8 million. The fraud was detected in November, involved a possible coordinated attempt siphon funds using hundreds of accounts. Authorities believe milk accounts were used in the fraud activity. Police arrested 47 individuals in connection with the case, and 3 suspects were charged under Section 4246 bracket 1 of the Penal Code for offences involving milk account. Investigations are still ongoing with assistance from Cybersecurity Malaysia and Bank Negara Malaysia. However, authorities confirmed that no Agrobank customer account were affected. Next, the case study is about penalty imposed by Bank Negara Malaysia in 2025 on Bank Rakyat, BSN, and Bank Islam due to IT and compliance issue. Bank Rakyat were fined 2.85 million because of repeat disruption involving e-banking, ATM, and card service. BNN found weakness in the bank recovery and response process, causing service interruption beyond the limit allowed under the RMIT policy. Next, PSN was fined RM995 due to prolonged banking service disruption. BNN stated that the bank failed to respond effectively to the incident, which affect customer banking service. Next, Bank Islam received the highest penalty of 3.44 million for 2 issues. The first involved extended system outage affecting online banking and payment service. The second involved delay in sanction screen and reporting, which caused late identification of sanctioned entities. Overall, BNM imposed this penalty because the bank failed to meet the required standards for IT management, operational resilience, and regulatory compliance. Next, I will pass the next presenter.
Hi, my name is Nurul Ain Farhana, and I will continue to explain a few factors contributing to the issues. So, one of the main factors in this case is the weakness in bank's technology governance and risk management system. The bank experienced repeated digital service disruptions that show their system monitoring, maintenance, and also operational controls were not strong enough. In Islamic finance, financial institutions must ensure their operations are conducted responsibly and efficiently because customers place their trust in the bank to safeguard their wealth and transactions. So, a weak governance can lead to system failures that affect customer confidence and also operational stability. Secondly, the increasing dependence on digital banking services is another factor that contributes to the seriousness of the issue. Many customers today use online and mobile banking for their daily transactions, especially after the growth of digital technology and cashless payments. When the bank system experiences downtime, customers are unable to complete important financial activities. Next, the bank's penalty also resulted from regulatory non-compliance. Bank Negara Malaysia introduced various regulatory frameworks to ensure that banks operate safely, protect their customers, and maintain financial stability. When the bank failed to comply with these requirements, Bank Negara Malaysia imposed a heavy penalty to emphasize the importance of following regulations. In Islamic finance, compliance is highly important because it reflects accountability, transparency, and trustworthiness. Another important factor is the failure to fully protect customer interests, particularly under the Islamic principles of hifz al-mal. Banking disruptions may cause customers to miss payment deadlines, business transactions, or financial obligations. This can lead to financial losses and emotional stress for customers. Therefore, Islamic banks have responsibility not only to provide financial services but also to ensure fairness, reliability, and protection for their customers. And next, let's see how these issues will affect an individual, bank, and community. For an individual, they may suffer financial losses when banking services are unavailable. For example, illegal transfer or failed transaction can cause late payment penalties, missed business opportunities, or interruption of important financial commitments. Individuals who rely on online banking for daily transactions are directly affected by service disruptions. And secondly, a repeated banking disruption can reduce customer confidence in the bank. Customers may feel insecure about the reliability of the bank system and may consider switching to other financial institutions. Trust is extremely important in Islamic banking because customers expect the institution to operate responsibly and ethically. And apart from that, customers may experience stress, frustration, and inconvenience when they cannot access their accounts or complete their urgent transactions. This situation becomes more serious during emergencies or important business activities. A continuous disruption can negatively affect customer satisfaction and overall banking experience. Furthermore, one of the impact on the bank is the financial penalties and increase their cost. The penalty imposed by Bank Negara Malaysia created a financial burden for the bank. Besides paying the fine, the bank may also need to spend more money on upgrading technology systems, improving cybersecurity, and strengthening compliance management to prevent the future issues. And the case negatively affected the reputation of the bank. Public confidence may decline because customers expect the banks, especially Islamic banks, to provide secure and reliable services. A damaged reputation can reduce customer loyalty and affect the bank's competitiveness in the financial industry. And lastly, it will also increase regulatory monitoring. After the incident, the bank may face stricter supervision from Bank Negara Malaysia. Regulators may require the bank to submit more compliance reports, conduct system audits, and improve their internal controls. This will increase operational pressure on the bank and requires stronger governance practices. And lastly, the community also will be affected by the disruption of economic activities. When banking systems fail, community members and businesses may face difficulties in completing their transactions. Small businesses that depend on online payments may experience delays in receiving money or paying their suppliers. This will affect the flow of economic activities within the society. And secondly, it will also reduce public confidence in digital banking. The incident may cause the public to lose confidence in digital banking services, and some people may become hesitant to rely fully on online banking due to fears of future disruptions or security issues. This could slow the growth of digital financial services in Malaysia. And lastly, on the positive side, the case may increase public awareness about consumer rights and financial protection. Customers may become more aware that they can lodge complaints and seek assistance when banking failures cause financial harm. This will encourage a stronger consumer protection practices and accountability within the banking industry.
So thank you, I'm Farhana, for your sharing. So let me explain about the solution for this issue. To effectively counter this tactic used by a modern scammer, Malaysia have deployed a comprehensive three-part strategy, which is core technology, policy and national banking, and proactive community practices. So let us begin with our first pillar, core technology. Our domestic banking ecosystem has undergone the drastic security hardening mandated directly by Bank Negara Malaysia. So, to stop the unauthorized access, banks have enforced the strict device binding to ensuring your online banking profile function on only one secure device at a time. We also use cooling off periods to delay a risky action like a first-time e-banking sign-up or sudden transaction limit change. Furthermore, the bank completely replaced the SMS OTP codes with an advanced in-app authentication backed by a real-time AI and machine learning monitoring to catch the anomalies instantly. Crucially, if you suspect your account has been compromised, you don't have to wait on the line. You can use the self-service kill switch features inside your banking apps to freeze your file instantly. So this brings us to our second strategic pillars, policy and national banking. Technology alone isn't enough. It must be backed by the institutional speed. This effort is spearheaded by the National Anti-Financial Crime Centre alongside with Royal Malaysia Police (PDRM) and the Association of Banks in Malaysia. Together they operate the National Scam Response Centre at 997 hotline, which now runs 24/7 a day and 7 days a week. Time is our biggest enemy here. Data show that syndicates can take away 80 to 90% of victim money within just 3 to 10 minutes by fragmenting funds across multi-layer mail account. If a victim calls 997 immediately within the first golden hour, bank can utilize the National Fraud Portal to instantly trace and freeze those funds before they vanish. Following the call, victim must file the official report to the station within 24 hours to keep the legal investigation active. On the regulatory side, updates to Section 424 of the Penal Code make the strict criminal offense to knowingly list or allow your bank account to be used as mule account. Police also evolving toward a fair compensation framework to ensure the shared responsibility between a bank and consumer when the fraud happens. So let us move on to our third and final pillar, which relies entirely on us. Community practices. Public awareness is our ultimate line of defense. Led by the Malaysian Communication and Multimedia Commission, the nationwide hashtag Jangan Kena Scam campaign have moved directly into our communities. This involves the grassroots outreach program taking place in public hypermarket, local mosques, and university roadshow to educate everyday citizens. Beyond basic awareness, we must practice a strict device hygiene, which means absolutely never clicking unverified hyperlink shortcuts, avoiding third-party application file, and downloading applications strictly from a secure official store, which is Google Play Store and Apple App Store. So by interlocking financial attack guidelines, 24/7 institutions respond and alert. Educated public, we can systematically dismantle the network that cyber criminals rely on. That's all from me. Thank you.
Next, I will discuss some recommendations to reduce operational risk and fraud in Islamic banks. First, banks should strengthen their IT security system to protect your customer information and reduce the risk of cyber attacks. This is important because the strong cybersecurity can help prevent security breach and financial losses. Second, banks should conduct regular cybersecurity audits and system checks. This is allow them to identify weakness early and take a corrective action before any major issue occurs. Third, banks should improve employee awareness of cybersecurity risk through training and education programs. Employees play an important role in preventing fraud and protecting sensitive information. They should also adhere to BM regulation and guidelines to ensure proper risk management and compliance. Lastly, Islamic banks should always uphold the principle of amanah by protecting customer funds and information. By implementing these recommendations, banks can reduce operational risk, maintain customer trust, and strengthen their. In conclusion, operational risk and incident fraud are important issues that can affect the performance and reputation of Islamic banks. The variety show the weak IT security can expose a bank to operational risk and reduce the customer trust. This situation is also against the Islamic principle of amanah, which refer to trust, and hifz al-amal focus on the protecting wealth. Islamic banks need to strengthen their cybersecurity system, improve their internal controls, and follow the BNM regulation and guidelines. By taking this step, bank can protect customer funds and information, maintain a public confidence, and ensure that their operations are in line with Islamic finance principles.